Hi, welcome to Governance Bites. I'm Mark Vanicevic, and it's my pleasure again to spend some more time with Jim McElwain.
Thank you.
Thank you very much, Jim, for your time.
Excellent. Thanks very much, Mark, and thank you for your time.
Jim is the Executive Director of the Institute of Finance Professionals in New Zealand, or INFINZ as it's most commonly known. He's been in that role since 2012. He's also on the advisory board of the School of Accounting and Commercial Law at Victoria University of Wellington, which is where you went to university,
That's
isn't
right.
it?
Yep.
And he's been there since 2019. He's got a very strong background in corporate finance, having worked at New Zealand Treasury, Lloyds Merchant Bank, PricewaterhouseCoopers, Ernst & Young, and a few other entities as well. He's been on the board in the past of the CFA Society, the Chartered Financial Analysts Society of New Zealand, and prior to his role as Executive Director of INFINZ, he was on the board of INFINZ. He's also been on the advisory panel of the External Reporting Board, or the XRB in New Zealand, so a really strong finance background and accounting background as well for the XRB side.
Some accounting, stronger in economics, yeah.
Right. So today, our conversation, given Jim's role in INFINZ, which is a not-for-profit entity with around 2,000 members in New Zealand of professionals that work in the financial services industry, we're going to talk about financial sustainability for not-for-profits, including professional bodies. So in your role as Executive Director of INFINZ, membership is optional.
Correct.
People choose to join INFINZ.
That's right.
So what do you provide that makes membership of the body attractive?
Yeah, so I think you've got to understand where you sit in the market. So we're providing people join typically members of the Law Society or CFA Institute directors. So they're getting what I'd describe as your core technical training in those bodies. What we're providing is two things. One is broader contextual knowledge around what's happening in markets, ESG, climate disclosures, and secondly, networking across the broader market. We've been very successful building our younger membership, and the stats are that 80% of members join the professional body within the first 10 or 15 years of their career. So we've got a very successful young professional, young woman of finance, emerging leader offering that is targeted at their stage of career, and that's received great support.
Fantastic. And in terms of, as you were saying, that networking, if I had been early in my career and had access to something like INFINZ at the time, what a tremendous boost that could be to meet some amazing people very early in your career.
So at the moment we've got 50 mentoring peers, so senior people being mentored by someone more senior in their career. So, over 10 years it's 500 people. So that's one of the examples which people can turbocharge their career, meet more senior people, expand their perspective.
Now, you run an annual awards event, you have multiple connection events through the year. There's significant tension between providing services to members and financial sustainability in a not-for-profit organisation. You've only got a handful of staff. How do you manage that tension between being financially stable and trying to provide as much service to your members as you can to make optional membership worthwhile?
So you do need to understand what it costs to provide the service, and you get feedback from the market whether people are prepared to attend courses. Nobody needs to attend learning development or other events, so they've got to be priced relative to competition and add value. So there's not a tension as such, but you do need to look at your offering and reappraise it. So for example, we looked again at our journal offering, which I was keen on, but the costs were $80,000 a year. So we're now moving to e-newsletters, and there's a much greater open rate and accessibility. So you do need to revisit your offering with a strategy process every 2 years to sit back and say what's working, what's not working, what's providing most value. So we do an annual member survey so we understand what services people value, and on occasion have to make a hard decision and reallocate resources.
Right. And the events that you were talking about before, the training events, do you run those to kind of break even or contribute a little bit of money as well? Or are some of those offerings loss-making that is coming from essentially the membership fees?
Exactly. So yes, our flagship events, the annual awards dinner and the conference, make money or gross profit before staff allocation, but the normal lunchtime breakfast events cost cost recovery in terms of food, and some of the young professional events are free. Again, they're being paid out of the membership. That's part of your membership benefit. So there is that differentiation.
Right, so balancing the books, of course, for any not-for-profit is very, very important.
Yeah.
And then defining what you're doing that is going to be loss-making or pure service provision, what you can do that can be can break even, and what you can offer that can bring money into the industry. Do you also then look for external sponsorship and things like that from other financial businesses around the industry, or around the industry, or is this purely funded by members?
Yeah, no, good question. So the idea with your major flagship events is that sponsorship, corporate covers your fixed costs, and we've got about 30 corporate sponsors, and then a dedicated supporter being the NZFMA in terms of our Young Women in Finance initiative. So significant sponsorship from corporates, sponsoring either the awards or the conference. Or dedicated initiative, so it's a mix.
Right, so sponsorship, particularly for those flagship events. So
Correct.
You've got a very strong quid pro quo there. You give us money and we'll put your name up and make a deal of you at this event.
Exactly.
Yes, right, that makes a lot of sense. Is there other not-for-profit funding that you have access to, or is it generally corporate sponsorship?
Member subs and surplus from running large events are a major source of income.
Okay. What risks then could challenge your financial stability, and how do you mitigate them?
Yeah, well, COVID, not being able to run the awards dinner or the conference. Of course, we ran the conference online, but the key point I come back to is, and particularly in these challenging economic times, you've got to stay super close to your customer. So again, we do the annual survey, and for our sponsors, we meet our sponsors once a year, whether we're in renewal mode or not, and describe them as partnerships who are looking to provide value to sponsors. So, and you build the goodwill so that, for example, in the awards dinner, I think only one table was cancelled when we had to move the awards dinner from May to October, and we provided our sponsors with exposure through newsletters. So you build that goodwill, and they'll see you right through those challenging periods. So that's super important, staying close to the customer.
Is there a certain portion of, of course, don't give us any details, but do you have money aside for a rainy day? Is there a certain amount of each year's subs that you go, we'll put that aside for a rainy day fund? So if something like this happens where we have to cancel our awards dinner, we can still pay the staff and keep the lights on.
Yeah, so that's super important, Mark, because the experience is if you've got to withdraw services and the member experience reduces, then it's very, very hard to recover from that. So you need what we call reserves. It's like retained earnings in a corporate to see you through the tough times or invest in the business. So, we've got a policy that, our reserves should be at least 6 months of our administration OPEX, but we're operating at 12 months, and you'd understand why the board management considered with COVID and others that you have a year's reserves. And what that enables you to do then is to run at a loss for a period, preserve services, and live to fight another day, or an extreme situation to wind down the business. So you do need to build that reserves, but it is a balancing act, because the retained earnings of reserves are generated by making a surplus, and so there's a balance, but super important you're able to retain the services and carry through.
Particularly in an optional membership-based organisation, as you said, if a period like COVID were to happen where you can't easily have your annual awards and your annual conference, you've still got to be providing service to your members, because otherwise your members will leave. Right. And as you say, it's all about keeping the membership numbers up and raising those membership levels, because that's still going to be the bulk of your income, right? And you've got to survive on that. Yeah,
that's right. So I like the accounting firm I call the member subs annuity income, 80% renew each year, so that's fairly stable. But we've also got multi-year sponsorships. But otherwise, you build the goodwill with your community, and they will, and if you're providing value, they'll see you through those tough times.
Yes, yeah, absolutely. That's really fascinating. I'm going to finish with one final question about directorships.
Yeah.
You've got extensive experience in governance. What advice would you give to somebody starting out a career as a director?
Assuming that you've chosen or you've been selected to a board, the key things to understand is that one famous term is you've got to have your nose in and your hands out, or trotters out, because typically you've come from a management position where you've got directly hands on the levers, so you've got to operate at a high level. But certainly for somebody that's in the first role, get briefed, so orientate, meet the management, view the sites. I always love visiting sites because you get a real sense for the culture and are they energised or sluggish or whatever. Review past board papers, last 2 years, so what are the issues, what have management promised, or what were the emerging things. Understand the business model, so how does the business make money. Institute directors and other sources for their broader governance issues, and to seek out external sources of knowledge about the sectors as broker reports and others, so that you've got a broader context, and to understand that as a board member you might have an expertise in AML or IR or trade or whatever it is, but you're being on the board for a broader commercial lead, so you do need to in positioning yourself for board roles, look for management roles which do broaden your experience set beyond your core technical competence. So if you're in a regulatory space or compliance, to build out, run a large operational unit or large commercial arm, so you got that broader perspective, because that's the key you bring to the table, is that broader context, and to monitor board but also add value in terms of where the organisation is going, and have a medium longer term lens on where the organisation's going.
So to reflect that back to you, the first point you raised about nose in, trotters out, very much about if you've had a career as an executive, then you're used to doing everything hands-on. As a board member, it's not so much hands-on, it's about the oversight and the feedback and the changing information. You also then expanded very much into learn. So learn about the company, learn about the industry, in the company, get some tours and stuff involved, so you can get a feel for the business itself, understand what its objectives are, read the previous board papers, learn about the industry it's in, find broker reports and things like that, understand what's going on, and also learn about governance itself. What is the role of a director? Making sure that you're getting that broader understanding of business than maybe that executive focus that you had, having a much broader mindset, so that you can go in there and provide good advice to the business.
So that would provide you with the ability to get up to speed quickly, but also make insightful contribution, because your performance in your first board role will help to presumably secure further roles. So that's super important. You do your homework and bring an informed and broader commercial perspective to the table.
All right. Jim, thank you very much for your time.
Thank you very much.
Great conversation. Always enjoy catching up with you.
Thanks, Mark, and thank you for your time.
I look forward to seeing you next episode.
Thank you.